Okay, so welcome to this week's market overview. I already recorded this, um, but there was some audio corruption. I think if you guys follow me on Twitter, then you guys saw that. So it's going to be a bit later of a release. Um, so essentially, we're going to get into the market overview here on the daily first, and then as per usual, go down and then do a short overview of ETH. And yes, so what was last week? Let's see. Last week was somewhere over here. I think it's exactly as I said. Right, so a few weeks ago, we obviously had this pennant breakout. I said we're going to go to the top and then probably take the liquidity top side, go down. Since then, we've just ripped. And again, like I think I said during that, if we flip these levels, like this order block, we flip it and we continue, then we're off to the races. And here we are. So last week was somewhere around here, and I just said, I don't exactly remember what I said, but this was essentially my overview. I'm sure I was relatively accurate because I remember being relatively proud of that to boost my own ego. So where are we at right now? So we're sitting in this like kind of range on the daily. As per key levels, I would definitely be looking at 54 as the main resistance here. Mainly because there's like a void, etc. This is kind of like that level where I'm most interested in it. Now, you could kind of draw this out and say this entire level here, although I think 54 all the way to 58 is obviously much too large level. So I'd rather focus on two separate levels, which is more like 54 and then up here at around 60, right? So these two levels are going to be key for the further development of Bitcoin price here. So that's kind of higher time frame what we're looking at. I drew a doodle on Twitter the other day and said this is going to be the God doodle. It went something like this. That's much too much, but something like this with a kind of peak over this and then break down and then rip back up, right? Excuse me. So that was essentially it. That's more or less the overview that I drew out. And yeah, I think it's still relatively accurate. Now we're just going to go to lower time frame 4 hour as per usual. So we're sitting in this range, and we kind of had this deviation here back into the range, top of the range. Was a nice short, but I didn't want to take that just because of I didn't see after a reclaim like this straight back into the range a good reason to doubt that this range could break out to the top side. Now we're back at the bottom of the range. This would have been a nice long. I was asleep, so that's gone. And now so now we just look here, see if this can actually rip through these highs and possibly test that 54k level as I previously just spoke about. So that's key here. I think if we go down to the 1 hour, you're going to see why exactly I wanted this liquidity taken. It was this double bottom here, it's equal lows. So I wanted this liquidity taken out of the range regardless, for a sustainable up move to come after that. And here we are, right? Perfect reclaim on the 1 hour of the range. Would have been a great long. Here I didn't like this anyways. Even, was I asleep here? I think I was. So this probably wasn't a perfect play anyways, because I usually don't like a bottom forming like this without properly testing that bottom of the range. But okay, so this is 1 hour, and I had gone back and forth with Trader Koala on Twitter, and he made a beautiful observation about price and how what it's been acting like. And it's the way I would say is up only, essentially, right? With these type of moves, and these type of moves, what they do, right? So you have it here, you have it here, you have it here, and they all look like moves that are bound to puke, right? So I'm just gonna leave this one here, but you can see these 4 moves, and what they look like is it doesn't look structurally strong enough to hold up, but what we continuously see is it actually holding up, right? So this looks like we should have puked here further. This looks like this could have just bled and puked further. This easily could have just boom, puked further, or just puked straight from here, puked straight from here, puked straight from here. Same thing right here, right? So you can see price action, actually, it doesn't look strong the moment we broke down here, and it feels like we should puke, and we continuously don't. So this is continuously shaking out like weak hands and people that are in over leveraged positions and on spots that they shouldn't be. So people that are like longing into this and getting stopped out here, or longing over here and getting stopped out. So it's constantly these weak positions of people that are actually not confident enough in their trades to actually stay in it, or even spot positions that are just getting out of their position. I think that spot is leading this whole rally, and you kind of want to continuously see that by looking at spot flows, because that's going to be one of the key parts here, where spot flows are diminishing, where you probably want to start looking, okay, well, how low can we go if spot isn't going to hold up this entire move. So additionally, what else is going to say about this is essentially, if we keep doing this and people are getting used to this, right? So you can kind of see this kind of breakdown of the support level here, a reclaim, and we go up, right? And here it's less so. Here's just a breakdown and straight up, but here's the same thing, right? It's kind of this like support level here, breakdown, V-shaped recovery, or Dalai Lama, back into that level, reclaim of that, and then we rip, right? And here's the same thing. We break under it, reclaim of it, and we haven't ripped per se, but we've gone back up to the top of the range, back to the bottom, back to the top. We're kind of ranging here. But I think once these less smart traders, so the ones that are puking here and are used to this environment where once we start puking and once we start dropping, it's going to be this big 10-15% drop. Once they start getting accustomed to the fact that that is currently not the environment we're in, that's when the environment changes back, right? So the smarter traders have obviously been taking all of these trades and have been able to make a bunch of money off of these rip moves. And the less smart traders have constantly been puking their position for the smarter traders to buy up. And I think that once the less smart traders, again, I'm just repeating myself, but begin to realize that the environment, so to speak, changed, that's when we're going to see continued, or we're going to start seeing actual pukes, because that's when they're going to start wanting to long it. And the smart people are going to, well, I'm not trying to say smart dumb. That's not quite what I'm saying, but players that are more adaptable to the market and understand when the sentiment is actually shifting into their favor. So for now, I think this range play out is going to be key. How does this range play out? Whether it's just a liquidity grab back into it, and at any point, if we get back into the range, I would start looking for, if let's say, hypothetically speaking, we see something like this, this is going to be a good position, right? Dip buying. First level is like 49-ish, maybe like more 48.5. I think I like this level more here. So this is probably more of my favorite level, but I'll keep this drawn. What else do we have? So we just have a bunch of levels drawn out here where I'd be interested in price action if we get back there, where I'd either be buying spot or starting to look for some type of just loading up on per positions, if anything. So I think this is pretty likely. We just see a rip to 45. 54, 55, something like that. As for support levels, 43 is obviously just intensely great, where I'd definitely be buying spot. And all these other levels are just going to be nice levels to start looking for a reaction, right? So whether it's here, whether it's here, whether it's here, or whether it's at this crazy nice level of 43. 38, amazing. This is just a fucking amazing level that a lot of people are probably going to be looking for. And ultimately, of course, 32 here, this fair value gap, etc., is still an amazing level, but I just highly doubt we come back and just puke this hard unless some macro shit happens that kind of makes it break down, right? So that's essentially it for Bitcoin. I don't know what else to particularly say on this, except, again, what I said last week, it still stands. That rather than looking for short positions on everything, look to buy more long positions on alts and on Bitcoin. So just look for dips to buy on rather than look for the rips to short on, because to be fair, the rips just keep ripping and the shorts keep getting blown out, in contrast to the perp longs that you can take that, or spot longs that you can take that are actually not getting shaken out continuously. Because even on these positions, if you're not a intraday 5-minute trader, you will not have gotten shaken out on any of these, because theoretically you should have your stop loss under those levels anyways. So there is a relative amount of liquidity being built up under the lows, which makes it nice to come back to like 45, 46 to take out all this liquidity here. That's essentially it. I think on BTC, ETH showing relative strength. It's honestly, it looks nice. It's showing relative strength, and I think that ultimately on the higher time frames is obviously still weaker than Bitcoin. maybe not in its percentage or anything like that, but I think in its, I actually don't know, I can check, but 227, and I'm assuming Bitcoin is a bit more, 235. So it's about the same, although of course, like if you just look at the chart with Bitcoin, we're currently up here, and ETH, we are still not above this April high, right? So this is the April high, and with BTC we're quite a bit above that. We've passed it, and with ETH we're still quite a bit under it. You know, we're still 10% or 20% away from taking out that high. So that's essentially for ETH. It's very strong. The last few days it's been stronger, but I still think that BTC is outperforming, and the reason is I think once that ETH ETF narrative pumps up and it starts getting a lot more traction, a lot more certainty, I think that ETH will absolutely rip, right? So I think that's kind of the overview of these two. As for alts, it's kind of like what I said. Keep buying longs on good in good areas, and keep just buying dips rather than trying to short some crazy rally on WorldCoin or whatever you're looking at. So yeah, that's the overview here. If you want to trade and you want to help out everything I'm doing, then of course go to Bybit, go to Woox, sign up with my referral link. Depending on where you are, you can pick your exchange. That would really help me out. I get a percentage, of course, of the fees. You get a percentage off of the fees, so I'm helping you and you're helping me, which is amazing. And yeah, thank you guys so much.